Happy August, everyone! Are you curious about what the projections in relation to the housing market will be for the rest of the year? Hi, I'm Carlisa Martindale, a broker with Century 21 Lifestyles Realty. Here are some things to consider as we head into the coming months. First of all, home prices are appreciating at normal rates. Over the past 10 years, we've seen home prices appreciating significantly from one year to the next. We just keep going up and up. Well, according to the experts in the Home Price Expectation Survey, Fannie Mae, Freddie Mac, and the Mortgage Bankers Association, they are anticipating appreciation to continue to go up as we move into 2020, yes, but at more normal levels, which they are estimating at about 3.6%. Secondly, interest rates are still very low. In the 1980s, interest rates were as high as 18%. The average interest rate over the last 30 years has been 8.27%, and today they are under 4%, which is considerably lower than the average over the past 30 years. Lastly, we need to remember that an impending recession does not mean housing crisis and crash. I know everyone is a bit nervous about all of the talk of a recession. According to research from the Duke Survey of American CFOs and the National Association of Business Economics, they are anticipating a recession within the next 18 months, yes. But recession does not mean equal housing crash like we experienced in 2008. In fact, expert financial analyst Morgan Housel tweeted, "An interesting thing is the widespread assumption that the next recession will be as bad as 2008. Naturally to think that, but statistically highly unlikely. Could be over before you realize it began." Oddly enough, in 3 out of the last 5 recessions that the United States faced from 1980 to 2008, home prices actually went up. And let's notate, 2008 was the worst in regards to housing prices declining, but we need to remind ourselves why that was happening. Notes were being sold to investors as A paper that were actually D paper. Loans were being approved that had no business being approved. An example of that would be approving people with stated income loans. These things just aren't happening anymore. Now, in order to get a loan approved, they basically want your firstborn child. So let's recap. The experts are anticipating normal appreciation heading into 2020. Interest rates are low and anticipated to remain low. If there is a recession, that does not mean housing crisis, but more likely will mean normal levels of appreciation. So what does this mean for you? It means get off the fence, make a move, and don't forget the wonderful advantages you may receive from owning a home and being able to write off the interest. I hope this mid-year market update was helpful for you, and feel free to reach out to me anytime for any of your real estate or community related needs.